What up? How you doing? Welcome back. I hope you guys liked my interview with Dev from Fission. Um, I got a lot of views actually, a lot relative for me, like 500 or so, which is always nice to see. Today we've got Rob from Gensource, which is a potash mining company up in Saskatchewan, Canada. Um, I would recommend watching the interview. It's pretty interesting. Potash is something I'd never even considered. I just kind of stumbled upon it and I thought it was pretty interesting. It's something that it's very niche. It is a form of potassium that goes into fertilizer. So it helps increase crop output. Obviously something that's very important. I mean, can you imagine what would happen if for some reason or another we couldn't create fertilizer anymore? It's something that you never really consider, the production of fertilizer. But it's a good interview. So why don't we take a look at their website, just go over that real quick for a few minutes, and then we'll get right to it. I don't want to hold you guys up. Alrighty, so here we are. We're going to look at their stock quote real quick. Trading at 8 cents, and the price didn't move today. So one thing you should recognize immediately is that this is a penny stock, and two, there's not much volume. So I wouldn't go dropping, $10,000 into this, because if you have to sell for one reason or another, chances are you're not going to have an easy time getting out of that position. So keep that in mind. Very, very low, price stock. Market cap only 30 million. But, you'll hear in the interview that these guys have done this before. They took something, a potash mine, got it to production, and then they sold it. I can't remember exactly the quote he says, but he does say in the interview, I want to say like 400 million or something like that. Don't quote me on that. So they've done it before and they've done well. This is their website. Let's find the fella that I talked to today. There he is, Mr. Rob. Very nice guy. CEO Mike Ferguson. Why Gensource? 3 C's. Cheaper. They're in the first quartile. Which, if you have looked at mining websites before, magically they're all in the first quartile. But, let's take these guys for their word. They seem pretty nice. Their technical report is on the website, so if you really want to, challenge that, see how cheap they are, you can read through the technical report. It's all on here. Just one click and you got all the information you need. Cleaner, environmentally, less impact, which we talk about in the interview, but he says that's something that lenders really like seeing these days. Sometimes they won't even talk to you if you're going to go destroying a forest or something outrageous like that. I know Canada is very liberal-minded these days, at least that's what it seems like, so that's kind of one thing they're focused on, and that's good to see. And then choice, this is another dynamic of the market that me and Rob talk about a little bit. He said they kind of bypass all the intermediaries. They sell to Helm Fertilizer, who sells directly to farmers. And that's good. That means you can get a cheaper product. And farmers, they're always trying to improve their margins because I think things are pretty tight. So if you can offer a cheaper product, then you can get, more sales. And they do have an offtake agreement for 100% of their product for the next 10 years, and that's to Helm Fertilizer, which is obviously, that's a good thing, because I would imagine lenders like seeing that. If you already know you're going to make sales, they'll know they're going to get their money back as soon as you get into production. It's not a matter of finding who to sell to and all these things. That's just another positive thing, but again, 30 million market cap, very low stock price. So keep that in mind. These things are risky. Anything at this level is always risky. But go on their website, check it out, hit them up on Twitter. I'm sure they'd be, Mike or Rob was very, responded. He was happy to do an interview, and that's always cool. So without further ado, here's my interview with Rob. Follow me on Twitter at ChainLinkWave. I'm going to rebrand that though soon. Subscribe on YouTube, and maybe follow Gensource. I'm sure they would appreciate that. All right, so well, thanks for coming on to start us off. I'm not sure why that keeps happening. If you could, why don't you just start with talking about potash and what it is? I think it's kind of like a very niche thing to invest in. It's something that I just recently discovered.
Yeah, sure. Potash is a bit of a unique animal. It is a potash or MOP, myriad of potash, or potassium chloride, which is the symbol K, in NPK fertilizers. MOP is a fertilizer, and it's a fertilizer used for growing crops, food crops. So in the US or in Canada or anywhere around the world where you're growing crops of any sort, whether it's for human consumption or for feed for animals, you need to fertilize the crop. And the macro fertilizers that are used are N, nitrogen, P, phosphorus or phosphates, and K, potassium chloride or potash, MOP. And Saskatchewan just happens to be one of the world's largest supplier of potash to the world. And it just happens to have the largest potash resource on planet Earth. As a matter of fact, there's about 3,000 years worth of potash current demand in the ground in Saskatchewan.
That's incredible. I kind of started my investing in like uranium space, which is up in the Athabasca Basin, which is, I guess that's for some reason or another, that's how I came across Gensource and the potash industry. Yeah, but I imagine it sounds like it's not something people think about typically, but it's a pretty critical thing to have, for the supply chain and food supply.
Absolutely. It, again, being one of the key macronutrients for growing food, absolutely. It's a very key critical element. And as a matter of fact, just during this whole COVID issue, the US government deemed potash or fertilizers as a key or strategic commodity and necessity that could not be stopped or halted or anything like that at borders.
And this goes into consumer fertilizer as well, or is this just kind of like on the industrial scale for large farms?
No, actually, your Scott's Miracle Grow that you sprinkle on your lawn has K in it, has potash in it. It has nitrogen and phosphorus as well. So it's not just for that food, golf courses, your back lawn, everything. Palm oil trees, sugar cane, soya products, soybean, corn. So it's a very key nutrient for these products.
So why don't we talk about Gensource and specifically, are you guys, is it hard for a small player like you guys to break into this industry?
Yeah, it's not easy. I mean, the largest potash companies in the world are in my backyard. As a matter of fact, my office is right across the street from Nutrien's office, which is the world's largest potash producer and seller. But the industry, the potash industry, is what is you would deem it or term it an oligopoly. So the potash industry is controlled by essentially 5 major producers. It was considered a monopoly up until 2012, when a couple of the cartels, or one of the cartels, the Russian cartel, broke up. But being an oligopolistic industry, it is challenging. And historically the approach has been to try and compete within the potash industry is to be large scale, and that was the only way that you could get economies and the only way that you can break into the market. But given our experience, that in fact is not at all a good way to get into the potash business from our perspective.
So I guess what they do is they don't want any new competition, so they'll try to just butt you guys right out of the industry. Is that basically how it would go? Do what they can.
Yeah, I mean, at the end of the day, the way an oligopoly works is they always sit on excess supply. So as oligopolies or monopolies, you have excess supply at all times. And as soon as you see that there may be a potential competitor, you increase your supply and you drop your price.
Yeah, it almost reminds me of Walmart.
Yeah, sort of like good old Sam Walton and our friends at Walmart.
Mom and pop stores, they just shut them right out.
Yeah.
So you guys, I noticed on your website you talk a lot about environmental impact. Is that something that is considered these days as far as getting lending or even buyout, things like that? Is that something that people consider now?
It's absolutely one of the most critical aspects of putting any resource project into a production. So whether you're potash or coal or nickel, zinc, any of the base metals, uranium, highly regulated industry, um, um, having an environmental sustainable approach or a very defined plan for maintaining the environment and approaching the environment from a sustainable perspective, it's absolutely critical. As a matter of fact, most international banks, from a debt perspective, if you can't tick that environmental and social responsibility box, you probably aren't going to be successful in attracting capital.
It's pretty incredible. I have a feeling that that might be a newer thing, just with the way things are going in the world. I can't imagine it's always been the case.
No, it hasn't. It certainly haven't. In the past, it's been, pretty much based on your, solely on your economics. Now it's CSR, corporate social responsibility. And it's a lot of capital, BlackRock included, kind of really led the charge beginning of 2020 by putting out a bunch of news releases saying that they're reallocating a lot of their capital to more. Now, what do you define as more or better sustainable practices? It's a bit of a continuum, but certainly that is definitely the trend. And when we speak to pension managers across the globe, their mandates are changing, and as such, they have to seek out companies that are very proactive when it comes to social, corporate, and environmental responsibility.
I noticed you guys have an offtake agreement. I think that's with Helm Fertilizer based out of Germany. Is that going to be critical in helping you guys get along and getting to higher and higher production?
Yeah, absolutely. What's interesting is our team, the people at Gensource, this is Gensource Potash. This company is not the first potash project that we worked on. The original one that we worked on was called Potash 1, and it was developed starting in 2007, and it was ultimately sold to Kalian Salts, K+S, out of Germany in 2011 for about $430 million. That project was scoped out to be a conventional solution mine, whereby it would produce, starting at 2.8 million tons and ramping up to over 3 million tons a year. What we realized as we were going through the development process, it's almost, you just cannot be a new entrant in the potash space within an oligopoly to enter that potash industry with that many tons. You have to have them pre-sold. And what that allowed us to do is to rethink the business model. If you were to look at the potash industry again and wanted to enter the potash industry, how would you do it? You would do it by entering the industry with smaller tons, with less tons, and be very strategic with how you place those tons. So Helm is an existing marketer and seller and marketer of fertilizer products. Helm AG is actually out of Germany. Helm Fertilizer is out of the United States.
And that's
it's a wholly owned subsidiary. And Helm has a very large footprint in the nitrogen and phosphorus industry, and they want to add They already sell or resell potash, but they want to have their own stream of potash because they have their own clients or customers that they want to sell to and supply to. And so our approach, our business model is all about being vertically integrated. In other words, we want to be directly connected with a partner, and we want to be as connected as close to the farmer as possible. And the way to do that is to work with a company like a Helm that has the relationships in each state or region within a growing community or within an agricultural community, and has existing customers in the form of retail outlets that service the farmer. We don't want to be a general marketer of product, because that's not a you'll lose at that game, because the oligopoly will crush you.
It's not a winning formula.
No.
That's pretty incredible, though. I wasn't aware that you guys have had success in this industry before, and this is kind of like your second go around. Are you basically trying to just tweak the formula and repeat the process, but just even more efficient and more, fine-tuned?
No, it's completely different, actually. We turned it upside down and started from scratch. And in other words, we started to truly understand the potash industry. You have to start at the farmer and work all the way back through the supply chain to the ultimate producers of potash, to understand the logistics and understand the whole supply chain and the cost structures that go with those supply chains. Once you understand that, you start understanding how difficult it is to get into the potash industry. It's just a mind-bendingly expensive business. So what we did is we said, okay, it's a great business to be in. It's a high margin business. It's a very consistent business, and it's a growing business because people need to eat food. But what we looked at was ways to scale the projects down. Conventional extraction methods do not lend themselves for scaling down in size. There's certain fixed cost items like shafts, underground shafts, or big evaporation units for solution mining that you have to pay for. So you have to produce millions of tons just to pay for that fixed capital cost. Well, we looked at...
From my understanding, this time you went with a more, I forget the word, but you use the salt stays underground, which should help you eliminate costs and waste water that you have to treat and all those.
Yes. So what we're doing is selectively dissolving or selectively carrying or moving the KCl out of the sylvanite ore. Sylvanite ore is nothing more than a mechanical mixture of NaCl table salt and KCl potash. And what we do is we just extract the KCl crystals. So in other words, we're just dissolving KCl underground. We're not dissolving the salt. And with that, because we're not removing salt, we don't have salt tailings piles. We don't have tailings management. We don't have brine ponds. We don't have all the issues and costs and infrastructure that you need to manage a salt tailings pile.
Okay. It sounds like it should help you with capital expenditure and all of those things, which is something small time operation definitely needs to be, fine tuning.
Absolutely.
As far as the potash industry as a whole, I mean, I guess you can kind of, it's pretty easy to see how much it's going to grow, or am I wrong by saying that? I mean, the population's only going to grow by such a level at such speed, right? Or is there other things involved here?
No, actually, you're quite right. The interesting thing is we have population growth, but we also have two things working against us right now, or two things that are to the benefit of the potash industry. One is arable land is decreasing as the population growth is increasing. Okay. And as a result, you need to have better productivity on your arable land. The second issue is in North America, Canada, the US, starting to see South America, all of Europe, most of Europe, but the rest of the world do not have the same agronomic practices, best practices deployed as we have here. And as they become more sophisticated and start deploying better agronomic practices, so understanding the nutrient contents in their soil, being able to access the appropriate nutrients at the appropriate time for the crop that they're growing, they'll start consuming more and more and more fertilizers in general.
That makes sense.
Typically, in the potash industry, you can go back to the early 1960s, late 50s. The average growth of the market has been consistently in that 2.5% to 3% per annum. Today, we're sitting at about we consume about 66 million tons of potash a year globally.
That's pretty incredible. It seems like, maybe I'm wrong here, but just looking at the stock prices, and I haven't found the price on potash specifically, but it seems like it's almost trading with commodities. Is that typically how it's seen, or is it more in the chemical industry?
Potash is a bit of a unique animal. Number one, you're probably not going to find a whole lot of potash pricing freely available. Again, because it's an oligopoly.
Keep it hidden.
Most contracts are signed, they're private contracts. So pricing is pretty challenging to get your hands on. You can get it. But potash, because it is an oligopoly, is very stable. So it doesn't trade like a fungible commodity like oil, gas, coal, nickel, zinc, copper, gold. There's a lot of volatility to those commodities. There's it's fungible. There's a defined market. You can mark to market every day or every minute or every second on those types of commodities. MOP, potash, that doesn't exist. There's no financial instrument that you can mark to market. There's no exchange that potash is traded on. So what you have to do is you have to understand regionally the pricing of retail potash at a farmer's co-op or an elevator or an agricultural service provider in the US or Brazil or China or India.
It seems like such a strange niche to be investing in, and yet it's so critical. It's like, it's weird. You would think it's more on the forefront of things.
Yes, and the industry has done a good job in keeping it that way.
Yeah, sure, that's by design.
It's a great business, and I mean, case in point, I live in Saskatchewan. We're the largest producer of potash on global Earth. In Saskatchewan, you're either a farmer, you work in the potash mines, you work in the oil and gas industry, or you work for uranium companies.
Okay.
And I've had the pleasure of working in all of them and owning assets in all those industries. And potash is probably the most stable and has the most global reach. And it's a very high margin business, but it's a high barrier to entry business.
Yeah.
And we are working on bringing that barrier down.
If people are keeping an eye on Gensource after seeing this interview, is there anything on the horizon that maybe they should keep an eye out on? Like, what exactly are you guys doing at this point in time?
Sure. Well, we've announced, we're well into our project financing. So we're working on about a $280 million financing, debt and equity. We've appointed a senior debt lead in the name of KfW IPEX Bank out of Germany. KfW is not well known in North America, but it's very well known in Europe. It's a very large bank, and they're leading the project finance efforts on the debt side. So we're looking at terms on about $180 million of senior debt. We have the formations of a small club or a small syndicate that is participating. We've identified and are working with Helm and another strategic investor to complete the approximately $100 million equity requirement. And right now, Gensource specifically is working on the last $40 million that is required to complete the transaction. We're deep into due diligence. We have 5 entities doing various forms of due diligence, which will be culminating within the next couple of months.
So you got the financing, you've got the offtake with Helm. If things move along, how far you think until you're in production and everything's moving along?
Yeah, I mean, we've been working at this for a long time, and I have, for some people were saying to me earlier this year, it's too bad you didn't get your financing before this COVID thing hit.
Yeah,
I have to say I'm glad we didn't, because if we had, we would have to shut down all operations. And when you shut down an operation that's partially built or in the process of being built, that adds an amazing amount of cost and time on your schedule. For us, if we can, we're planning on financial commitment by late spring, early summer. That allow us to get into the construction phase and development phase by late summer, early fall. And it's really about a 22-month construction period until first production. So it's really quite quick. Basically, we're building a processing facility that's, it would look like a large Quonset in a farmer's field. And that's attached to a series of wellheads that you would see at a conventional oil and gas battery. So it's a lot of the technology and process and equipment is all available, readily available, I might add, right now. And fabricating capacity is easily accessible. So we can get this thing built fairly quickly, and within 22 to 24 months be into cash flow.
It's exciting. Sounds like you guys are, moving along pretty well. That's pretty much all the questions I had. If there's anything else you want to say, or if there's anywhere, where can people go to find more about Gensource?
Sure. Happy to, you can follow us along on our Twitter account, LinkedIn, or on our website at gensourcepotash.ca. All our contact information is on our website. Stay tuned. We're updating our website look, and we're having a bit of a corporate rebrand with this as we move forwards into the summertime. And you'll probably see a lot of us going forwards as it relates to leadership when it comes to the environmental stewardship, and stewardship as it relates to the community that we operate in, and then of course the broader community in which we supply product into.
Okay. Thanks, Rob. I appreciate you coming on, and I'll be keeping an eye out. I'll definitely be following you guys.
Right on, man. Look, I hope you make a lot of money.
That's what we're all here for, right?
Yeah, right on.
Right. Have a good one, man.
Yeah, you bet.